A very good morning. You're watching News 9. I'm Karthik Malhotra, and what a week this is promising to be after the Budget 2025 presentation by Finance Minister Nirmala Sitharaman. There's a new tax bill likely to be tabled this week itself, but that's not all. You also have the Reserve Bank of India's first Monetary Policy Committee meet starting this week. So over the next 1 hour or so, we'll try and assess what do the tax changes and other changes in the Budget 2025 speech mean for your finances. We'll also get an understanding of which are the sectors that will potentially get a budget boost by Finance Minister Nirmala Sitharaman. On the show today, I'll be joined by Ravi, Swarna, partner Lakshmi Kumaran and Sridharan, as well as Feroze Azeez, who will bring you all the updates on what sectors you should be bullish on. You're watching Morning Brief at 9. This is Morning Brief at 9. First up, let's take a look at the headlines. Finance Minister Nirmala Sitharaman presented Budget 2025 on Saturday, ending her speech with a massive tax relief for India's middle class. No tax for salary up to 12 lakh rupees. Standard deduction of 75,000 stays intact. We decode what these tax changes mean for your wallet. The government is betting big on big consumption. Boost to the GDP with the tax cut in income taxes. Will this lead to private sector investments? And in a fillip to India's gig economy, 1 crore gig workers to get insurance coverage by them registering on the eShram portal. As Finance Minister delivered a budget that befits India's quick commerce boom. And Budget 2025 also saw changes in the tax deducted as well as tax collected at source. Simpler TDS rules to kick in, and no TDS for senior citizens with interest income up to 1 lakh rupees. Students studying abroad to be exempt from TCS up to 10 lakh rupees of remittances. Budget 2025 also extends concession for self-occupied houses up to 2 houses from 1 earlier. We decode what this means. And a new bill is to be tabled. This will be introduced this week. FM promises simpler tax law. Will the old tax regime and deductions on savings be done away with by way of the new income tax bill? And it's not all about consumers. Basic custom duty on electronics like TV panels has been up from 10% to 20%. But exemption on EV battery components could perhaps prop up the Make in India dream. And with US President Donald Trump going ahead with tariffs on Canada, Mexico and China, fears of tariff on India spark concerns. And finally, with the budget done and dusted, all eyes are now on the new RBI Governor Sanjay Malhotra for RBI's first Monetary Policy Committee meet this week. Is a rate cut finally in the offing? And first up, let's get you the impact of Budget 2025 on your finances, on your wallet, and what these changes in the income tax slabs would mean for you, the tax-paying citizen. First up, let's quickly recap what have been the key personal finance changes made in Budget 2025. First up, the income tax relief. Now, we try and decode with this change in the new tax regime and the slabs as well as the threshold of income, how much will you end up saving on your taxes. Number 2, there would be no TDS for senior citizens drawing interest up to 1 lakh rupees. Remember, this has been upped from 50,000 rupees being the limit earlier. So we understand what other simplifications could be perhaps in the offing as part of the TDS changes that Finance Minister talked about. Next up, all international spends up to 10 lakh rupees would be exempt from TCS. Is that right? Or is the exemption only for education loan and remittances on education up to 10 lakh rupees? That's what we'll try and find answers to today. And then self-occupied houses, there has been a change in that as well. What has been changed in budget 2025 and what it means for 2 self-occupied houses and not just 1 by way of your tax implications. And finally, there's going to be a new income tax bill which would be tabled in Parliament this week. What should we expect on direct taxes? And well, simply put, is this one of the first instances where we will see the old tax regime get out of the way? Joining me to discuss this and more is a very special guest this morning, Ravi, Swarna, partner Lakshmi Kumaran and Sridharan joining in. Good morning, Ravi. Thank you for taking out time this Monday morning. Let's start at the very top. Massive relief on income tax for the middle class salary earner. Now, Finance Minister has gone ahead and said that tax benefit could be as much as 1.1 lakh rupees. Take us through what these changes are and which classes of taxpayers and salary earners end up saving how much.
So, thank you so much. The finance minister said that no tax up to 12 lakh rupees, but that's actually a misnomer. If your income is up to 12 lakh rupees, then obviously whatever is the tax amount, you'll get a tax relief. But if your income is more than 12 lakh rupees, but up to 12 lakh 75,000, then also you don't pay any tax. Because you get a rebate of
75,000, Ravi, that you're referring to is the standard deduction. So what we're talking about is salary of 12 lakh 75,000 rupees. 75,000 is standard deduction across the board, and hence no tax to be paid for salary up to 12 lakh 75,000 rupees. Am I right?
No, that's where I'm coming to. It's a misnomer to say that no tax for any person. It's not a basic exemption limit of 12 lakh rupees.
Okay.
If your income is 12 lakh rupees, no tax. Say if your income is 15 lakh rupees, then this 12 lakh is not the exemption that you will get.
That's right.
You will have to follow the new regime which the finance minister has provided, which is 0 to 4, 4 to 8, etc.
All right. Which class of salary earners end up saving how much actually?
So, any class of salaries, so depends on your bracket of salaries. So, the amount can vary. And if you look at the FAQs, they have provided a detailed amount, like which class of salary will get how much. So if your salary is 12 lakh, you don't pay any tax. If it is 12 lakh 75,000, still you don't pay any tax. But if your salary goes beyond 12 lakh 75,000, then you will have to compute your tax as per the new tax regime, which I mentioned earlier is 0 to 4, 4 to 8, etc. So definitely this new regime is much more beneficial than the old regime which existed prior to this finance bill. So depending on your tax bracket, you will have to compute your tax liability. And certainly the tax which you will pay in FY26 will be lesser than what you had paid in FY25.
All right, and let's look at these tax slabs also, which and the comparison between the existing new tax regime tax slabs and the ones that have now been proposed in budget. So if you look at the main difference, that also comes for those who are drawing salary between 15 lakh rupees and 24 lakh rupees per annum. Remember, in the previously and presently applicable new tax regime, salary above 15 lakh rupees is taxed at 30%. Now that goes up to 24 lakh rupees in the case of the 30% tax slab. So is it fair to assume, Ravi, that those who are drawing salary between 15 to 24 lakhs are also some of the beneficiaries of this newly proposed tax structure?
In fact, if you look at the comparison of the two tax slabs, the benefit goes to each and every one, starting from 0 to 3 to say up to beyond 15 lakh, because 0 to 3 gets an additional 1 lakh rupees of benefit. If you're drawing 4 lakh rupees, you don't pay any tax. 7 lakh becomes 8 lakhs, 10 becomes 12, 12 becomes 16, and then 15 becomes 20 or so.
Right.
So the benefit is to each and every class of category of salary person or any other person who is earning income other than salary.
Okay.
So a lot benefit to the middle class taxpayers who was looking for income tax benefit for so long. And finally, this budget has provided much needed relief to them.
All
So
right.
they'll have like more money in their pocket to invest or to spend on their household.
All right. And let's now shift focus to, Ravi, the changes in the TDS and the TCS. Let's begin with TDS. Finance Minister said that concession for senior citizens who draw interest will now be exempt from TDS up to 1 lakh rupees. This is up from 50,000 rupees earlier. The Finance Minister also spoke about simplifying TDS. So what do these changes and proposed revisions in TDS? Let's begin with TDS. We'll come to TCS later. What do these revisions in TDS really mean for those who do pay that 10% TDS on whatever income they get?
So TDS is deducted on different kinds of income. Like for rent, it is deducted at separate rate, commission separate rate, salary separate rate. What this finance bill has done is that it has increased the minimum level up to which you don't have to deduct TDS across the board.
Okay.
Not just senior citizen, not just one particular class of income. So across the board, wherever there were limits, earlier if the limit was 5,000, it has become 10,000. It was 50,000, it has become 1 lakh rupees. If it was 1,80,000, it has become 2,40,000 in the case of rent. So across the board, the TDS basic exemption limit, so to say, has increased. So the compliance burden on companies or whosoever was liable to deduct TDS has eased to a certain extent. That's on the monetary part. Other than that, there is no as such simplification.
Okay.
The one big change in the TDS is that if you're a non-filer income tax return, as a deductee, if I don't file my return, then there is additional burden on the deductor to check whether I'm a non-filer or not.
Okay.
He will have to go on the compliance portal, check whether I'm filing return or not, and accordingly apply the rate of TDS. Because if I'm a non-filer, the rate of TDS is 20%. So that additional compliance burden on the deductor is very harsh.
Okay, and talking about the compliance burden on the deductor, talk to us about the changes in TCS. I remember about 2 years ago or so, there was this hot debate on TCS for international spends was now capped at, in fact the limit was up to 7 lakh rupees. Now, Finance Minister has said that foreign remittances up to 10 lakh rupees will be exempt, but is this 10 lakh exemption only for students who have availed an education loan, or is this across the board?
You're absolutely right. It is only for those students who are traveling abroad for education and taken loans. It is not across the board.
Okay, so only students who have taken an education loan and the amount being remitted out of the country is 10 lakh rupees, then there is, or more, then there is a TCS exemption of up to 10 lakh rupees, but the standard 7 lakh rupees TCS on all foreign spends continues to stay intact. All right, Ravi, I want to move on to this change in self-occupied houses. Now, Finance Minister said that instead of availing the concession only on one self-occupied house, you can now avail a concession on 2 self-occupied houses. What exactly is this concession and who gets to gain by declaring 2 self-occupied houses?
So prior to this finance bill, if you had one self-occupied house property or the property which you could not occupy because of your business reason and you had to stay away from your house, then the annual rental value of that self-occupied property was not treated as your house property income. But now that has completely been done away with. Now there is a simple exemption provided to 2 house properties which I'm self-occupying for myself, and that's all. So earlier, if you had 2 house properties, you pay house property income tax on one of the properties, but now on both of the house properties, you don't pay any tax. So that will certainly increase the housing sector.
All right. And before I let you go, Ravi, I want to understand your expectations on the new tax bill, the new income tax bill, which Finance Minister has promised will be laid out in this week, starting today. Is it pretty much a goodbye to the old tax regime, or do you think the old tax regime is there to stay, but it's just going to be simplification of the various elements that go into the fairly complex tax bill that we have right now?
I don't see it being a complete revamp of the existing tax law. The finance minister herself said in her speech that majority or 50% of what the current income tax act is will stay in the new income tax bill. We are looking for the simplification of the tax law which exists today. We are looking for the tax law to deal with the new various business models like AI, etc. And we are looking at the new income tax bill that will provide tax administration to work with businesses rather against the businesses. So on tax administration side, tax simplification side, there's a lot of hope. It's not going to be a complete revamp of the existing tax law. Existing tax law to a certain extent is going to remain same in the new income tax bill. Yeah, but the simplification is going to be the theme of the new bill.
Okay, and do you expect the simplification primarily again to come in line with what the government has been trying to do, which is simplification of appeals and the scrutiny and trying and building this trust in the ecosystem, which Finance Minister even spoke about yesterday in one of her interviews after the presentation of Budget 2025?
Litigation is the main pain point of any taxpayer. If your litigation starts and if it goes up to Supreme Court, it takes around 20 to 25 years for it to get resolved. And presently, the income tax appeals are pending at the first appellate authority before the National Faceless Appeal Center, and which is leading to tax adjustment of refund for subsequent years. So we are hoping that the stricter timelines will be provided for the appellate authorities to resolve the tax dispute so that the things can move forward. If things are stuck as on today, and which is harassing the taxpayers.
All right, Ravi, Swarna, thank you so much for taking out time this Monday morning and joining us right here on News 9. Well, time for a short break on Morning Brief at 9, but coming up on the other side, Feroze Azeez with his analysis of Budget 2025 and what it could mean for various sectors that tend to get impacted by way of the Finance Minister's announcements. You're watching Morning Brief at 9. Come back after this short break.
Associate sponsor, New Virtus GT Line, style to wander.
Your promise is IGI certified. 14-step grading process. IGI Trust certified.
Mama must be missing us, na?
Let's take you on, babe, give me one day. Feel the itch under my skin, it's a fun day. You been laughing when you see we in love, hey. It doesn't matter, just gotta get going.
New GT Line, Taigun and Virtus. Volkswagen.
Welcome back. You're watching Morning Brief at 9. Let's look at the mood check of markets on the first day of trading after the announcement of the budget decisions on Saturday. And as the trend continues to be, we see markets go up in the run-up to the budget, but post-budget, we see a correction. And what a correction coming in this morning. Nifty is down about 1%. So is Sensex. Nifty below the 23,300 mark in early trade today. Sensex just about touching the 76,800 mark. There's volatility even in the mid-cap and small-cap space. Both these broader market indices have lost about 1.6% in trade this morning. Let's look at the Nifty 50 heat map and try and make sense of which sectors are reacting how to Budget 2025. Well, not great news. In fact, The banking sector seems to be the most hit. HDFC Bank is down about 1.1, so is ICICI Bank. SBI also down about a percentage point this morning. Tariff threats or I don't know anticipation of RBI's rates, but the IT sector is also taking a beating this morning. TCS is down about 1.7% or so. Budget has promised to deliver a boost to the middle class, and the government is betting on the capex cycle of the FMCG sector to perhaps kick in, because there's a consumption boost and that should lead to a higher GDP. So we are seeing a little bit of green action when it comes to FMCG stocks this morning, but overall more sectors in red than in green. Helping us understand the mood of the market this morning is Feroze, Azeez, Deputy CEO, Ravi Wealth, who joins us this morning. Good morning, Feroze. Take us through why are markets in panic mode after budget?
So Karthik, of course, after budget, it is not so much of the budget's impact, as you can know. Over the weekend, Trump has done a lot of topsy-turvy decisions and some counter tussles between two countries which are reasonably well ingrained in trade, like Canada and US. Canada threatens to say that we'll stop oil exports to US, where 50% of US imports of oil come from Canada. So this uncertainty, which is the global uncertainty, is why the markets are marginally softer.
Okay.
Now, one thing, Karthik, each of us have to take note that any kind of turmoil does not result over the last few years of a gap down. Right? Have you noticed, Karthik, we don't get a gap down of 2%, 3%, which used to happen if you have been for the last a decade and more,
right,
on the markets. You would see that earlier, before COVID, you would see so many news which come overnight would result in a 2% gap down, 1.5% gap down, and then market goes wherever it goes.
Right.
After COVID, after 22nd March, it doesn't happen, because the unsung hero of this lower volatility in Indian market
is the retail
the
investor?
net short circular. Nobody can wake up in the US or any country for that matter and short Nifty unlimited.
Right.
Most countries don't have a limit on short. India has a limit on short selling, which is the right thing to do for an investor. So that's why it doesn't perturb me. This is not so much of a budget impact. It's more of the geopolitical uncertainty which is emerging. But still our markets are reasonably resilient, because shorting unlimited is not permitted. We are one of the few top 10 economies. One of the few, none of the other economies have any short selling limitations.
Right, absolutely. And I think the SEBI circular that you're talking about really came in at the right time and tamed the negative action that could impact Indian markets. So you're saying this is a Trump threat, a Trump tariff threat, which is spooking markets right now. But Feroze, honestly, haven't the markets factored that in already? So is it just the fact that that finally Trump is seeing through on his electoral promise of putting tariffs on nations which he feels are being unjust to trade with US? Did markets not factor that in? And is this just coming because he's gone ahead and slapped tariffs finally?
See, Karthik, if you look at today's opening, for example, of course it is factored in, is why the markets are, as we speak, down 0.9% on Nifty. Okay, approximately. Okay, we'll give or take. Right? 0.9%, as per 18 standard deviation in a year. If the market is supposed to be volatile, if the standard deviation is supposed to be 18, the average movement per day is 1.2%. Anything more than that is abnormal. As per the standard deviation which Nifty or S&P 500 throws up, 1.2% move per day average is what 18 standard deviation implies. And that's what is the safest capital market, one of the safest capital market in the world, which is S&P 500, is supposed to move 1.1% a year, a day. And that's what the standard deviation means. So 0.9 implies that it's already factored in, is why it is 0.9. If it was not factored in, and if the market opens 3% gap down, where it's supposed to be doing only 1.1 per day, then I would say, okay, markets were not expecting so much of a stifter tariff from Trump. So I'm not too perturbed, because it's still well within the range of what is the permissible volatility of Nifty. Like you have for valuations, for return, we look at PE. For risk, any abnormal risk should throw up more volatility than anticipated.
All
And
right.
that's
Good
1.1% per day.
good to have some optimism this Monday morning, even as markets open in the red. Feroze, before we move on to maybe budget impact on specific sectors, I want to stay with what is happening globally for just a little bit longer. Now, you mentioned that that foreign investors can't short the Indian markets beyond a point. I understand that. I respect that. But does it mean that the onus of ensuring that we don't go into a bear run is now with the retail investors and DIIs who are also banking on retail investors? Because it seems that foreign investors are going to continue to sit on the fences until there is greater clarity on tariffs.
Completely agree, Karthik. We can't actually live without 20% of capital market ownership. $900 billion belongs to FIIs. It's not, you can't let them go and still survive with even DI money and retail money and maybe corporates and bank treasuries, which are the participants in the Indian capital markets, because FIIs have brought you so far. Right, FIIs have had a very large role in playing in the Indian equity capital market. Indians have a large role to play in terms of funding fiscal deficit for government. So I respect them immensely, and we can't survive without them. That's my take. The good part of FIIs, Karthik, if you break it down, which I don't know why the industry or most participants of the capital markets don't break it down into two parts. One is FII, which are long only, FII, which are prop traders. FII, which are long only, are pension funds in the US, for example, or any index funds which follow FTSE or MSCI indices. They have not sold. You look at their ownerships, it has only gone up in the last calendar year. And if you look at those FIIs, which are prop traders, ARB guys, hedge fund guys, they have in January sold all their positions in small cap, if my guess is right. So FIIs exit cannot be considered as one lumpy chunk. FIIs have two very different behaviors. Prop traders have a very short-term mindset, and the other index fund FIIs have such a long-term mindset, which is beyond my lifetime. So we generally use this FII word interchangeably between these two non-homogeneous sets, and that's the relief which I had, that the long only guys have stayed put. DIIs have bought January, retail has bought about 7,500 crores. Retail numbers don't get published so quickly. 13,758 crores is what first 30 days of January have brought from retail. Others, which is another category where corporates, HUF and firms are categorized, they have sold 7,400. If I look at these two chunks together, there has been a 7,300 crore positive from the retail and the corporate side.
All right, Feroze. Okay, let's move on now to budget 2025 and impact, not on the broader markets, but sector-specific impact. Now, this, of course, Feroze, I think you'll agree with me, has been a budget where the focus has been on the middle class, and the middle class to prop up the consumption downturn that we had begun to see. And that consumption being 60% of the GDP, hopefully adding to GDP growth. So I want to get your take first on FMCG stocks and the consumption sector stocks. How do you see them faring in the year ahead?
Karthik, if you remember in my last interview with you, I would have said the last interview. The last interview was just
last was on budget day.
Yes. Yeah. So a few interviews back, let me be a little more correct. I told that our focus has been we believe that ABC, which is easy to remember, automobile, banking, and consumption are the sectors to be focused upon. So that's why we are abbreviated as ABC, and that gets reinforced in this budget. Now, why banking? Banking is already at its trough valuation. Banking, once the interest rates come down on the lower end of the yield curve, their deposit growth will automatically get resolved, which people are not speaking about. If yields on the short end of the yield curve come down from 6.5 on the repo side to, let's assume, hypothetically 5% in a year and a half, or 2 years, then what happens is a 5-year FD gives you 7%, a 1-year FD gives you maybe 6%, and a 3-month FD gives you 5%. If this is the kind of yield curve, automatically people will start choosing longer dated deposits. So deposit growth will become so much more simpler if the yield curve is not flat, which it is today. And that's the major problem why deposits are not growing. In spite of that, Karthik, banks keep cribbing that the money is going into equity. It's such a wrong narrative, because 43% of last year's household savings went into deposits. 43% of 34.58 lakh crores went into deposits. And 43% guy is saying, yeah, why is equity taking away 4.5%? It doesn't make any sense. 70% is going into insurance policies, and insurance policies are largely pushed by banks. You're okay to give away your CASA balance and your deposit balance to insurance companies. But when it goes into equity, because there's not too much commission to be made, banks are creating a narrative that equity is taking away assets. Last year's 6-7% total equity, including direct equity, is abysmal to a country's saving put into equity markets. So I don't think the DIIs will have any time a liquidity crunch.
Okay, let's talk about the banking sector a little more. There has obviously also been a credit enhancement for MSMEs. This means that maybe the banking sector should see more demand for loans coming their way. At the same time, all eyes also happen to be on the new RBI governor, Feroze Azeez, and this is Sanjay Malhotra's first MPC, and that is going to happen this week as well. So a potential rate cut could lead to some action on the NII space for banks. And can we see maybe, you know, as a run up to this anticipated 0.25% rate cut, some more deposits coming to banks this week?
Yes, I think the rate cut is priced in from a debt market standpoint. But of course, the deposits growth coming back will require a few more rate cuts and a longish period of this differential rates being prominent to the end consumer of a deposit. So I would say that the sentiment will improve on the banking sector. Bank Nifty can get some reasonable support with this action, which I think is possible, because I'm also looking forward to the first meet of the new governor. And I think from the ministry, if there is a representative in RBI, the thought process is consistent. I love the way the ministry clarified that the budget was not for the middle class because we were worried about consumption. We were worried about the middle class.
Right.
And we wanted to support the middle class, and the collateral benefit is consumption.
Right.
And it's not the other way around that I wanted to support consumption. I was left with no choice but to support Indian middle class. So that was a very beautiful clarification. The outcome could be consumption, but that was not the reason why that action was taken.
The stated intention, I think the stated intention versus the real intention, because had we seen better GDP growth numbers, Feroze, had we seen no dip in consumption, especially in urban areas, I'm not really sure if Finance Minister would have gone ahead and given this concession to middle class. But yeah, for now, let's take it on face value. I want to come to another interesting sector, and this is the 1 crore gig workers who are likely to be impacted positively by way of their registration on the Shram portal. Now, is this a positive even for stocks like Zomato, Swiggy? And do you think the timing for a company like Zepto to come back and change its domicile back to India and go ahead and participate in the IPO market for the quick commerce space, do you think Budget 2025 has given a little bit, delivered, if I can use that word, delivered a hot boost?
Karthik, on your previous comment, I think you're better judge of what's stated and what actually, honestly, because we see it from a little distance. As a journalist, you've seen it far more closely in terms of stated and actual intents. So I go with you on that topic. Coming to the second point which you made, for quick commerce, what's the budget got in store? In my opinion, the quick commerce business has factored in the next 20 budgets to my mind. So any news which comes, which gives you a short-term fillip, I would not be very, very positive. Because you're speaking about, now look at the kind of results. One result of a 50% fall in one of the large quick commerce businesses results in such volatility in spite of it being overowned. Let me give you some data. I'm not giving you any opinion on Zomato as a stock. The highest, I think 32 crore shares were added by mutual fund industry, different schemes in FY24 in Zomato. In spite of such ownership, this kind of volatility is because people are speculating not to next year. They're not speculating what is going to be the earnings of 2027 FY. They're looking at FY37 also when they're looking at businesses like these, which are reasonably volatile on their bottom line. So I would not be rushing into any business model on one budget, some little positive news, because there are such overwhelming different variables which impact these businesses. I have not seen too many businesses which are over-owned by the DII can still throw up such large volatilities on a quarter result basis.
Absolutely, and what you're referring to, we've had that data also on the screen now. In fact, if you look at this calendar year alone, Swiggy is down almost 20% on a year-to-date basis, and you were talking about Zomato. Zomato is also down about 15% or so. So yeah, obviously, I think it'll require a lot more than inclusion of gig economy and budget speeches to understand the business model better and form trading strategies or investment strategies accordingly. Feroze, I also want to draw your attention to some of the Make in India sectoral stocks, and this again is something that the government is trying to incentivize or de-incentivize, as you see it, by way of changes in the basic custom duty. So if you look at TV panels, for example, which will impact a company like Dixon, you have a basic custom duty now increased from 10% to 20%, which means you will have lesser imports and hopefully more manufacturing of TV panels here in India. But the flip side is that for components that go into electric batteries for the EV e-mobility space, you have an exemption on basic custom duty. So talk to us about the Make in India takeaways that you had from Budget 2025.
Karthik, after having tracked so many budgets over the last 7-8 budgets of Nirmala ma'am, I've realized that those are all page fillers to my mind. When you look at the expenses which are spent out of our 47,31,000 crores approximately of our total expenditure, these are all tiny fractions. These are good narratives, and to make sure that the budget speech is at least lasting an hour and a quarter. But to my mind, what I look for is the top 10 expenditures and some key expenditures. So Make in India, well, the budget is now being treated as a budget, not like a speech, because budget is about kharcha kitna, amdani kitna. And मैं खर्च कहाँ करने वाला हूँ, that is also provisional. That gets changed in May, maybe again. So point I'm trying to make is budget should be seen not as an event, as a disclosure by the government of how much will they collect, where will they spend. So Make in India, I think there are better platforms where they give you more information than a budget does, or the bill which subsequently gets released. But what I would want to draw your attention to is Home Affairs, which has got a 68% growth or in allocation from 1,30,000 to 2 lakh kariban, somewhere thereabouts, almost a lakh crore increase or 95,000 crore increase in Home Affairs and 1% increase in education. The last 5 budgets has increased our education budget by 7%. Now what happens is, because we are distracted with so many budgets, we forget the compounding impact. Other than our portfolios, there is compounding impact on our expenditure. We were spending 85,000 crores in FY19 in education. Now we are expected to spend only 1,21,000 crores, which is saddening for a country whose average age is 29 years.
Absolutely. Well, let's leave it at that for this morning. Feroze, Azeez, as always, it's a pleasure having you here on Newsline. Thank you so much for taking our time on this very important day. And of course, let's see how the tariff war pans out and what we have in store in RBI's first Monetary Policy Committee meet for this calendar year. But time for a short break right now. Before that, a quick look at the global headlines making news today. Like we've been mentioning, US President Donald Trump imposes steep tariff on Canada, Mexico and China, raising fears of a trade war and an economic slowdown. But Canada, Mexico and China, all three hit back as Trump's new tariffs spark global trade tensions. And the US stock market has also seen a decline as President Trump announces tariffs on major trading partners. The question we ask is that could India be next? Staying with the US, inflation has risen to 2.6% in December, signaling cautious Fed stance on rate cuts. Samsung, meanwhile, warns of AI chip slowdown amid US export restrictions to China. We'll tell you what this means for the race to artificial intelligence supremacy. And Donald Trump also says that Venezuela will take back illegal migrants, including gang members, and cover transport costs for their repatriation. And Panama rejects US canal claims, discusses expanded migration deal with US Secretary of State Marco Rubio. Apple shares rise after forecasting higher iPhone sales and surpassing Wall Street estimates with strong services and device revenue. And moving to Europe, tens of thousands protest in Berlin against conservative-backed immigration bill supported by the country's far-right party, the Alternate for Deutschland or AfD.
Is to the nines. In literal terms, it's perfection. But to us, it's not just a phrase, it's an attitude. One that starts at your desk and sends a statement to the world. To the nines is about taking charge. It's a way of life where every seam, every fold, is crafted with excellence. It's timeless elegance and uncompromising quality made for the corner office. It's the ideas that inspire redefining order and elevating the tabletop. To the nines, for the leaders of today and the visionaries of tomorrow.
If it's a cancer, then what?
It's very distressing.
Anyone can have cancer.
Mentality है कि ये बीमारी मुझे नहीं हो सकती.
There's a thing called cancer is right inside me.
सबसे पहले जो होता है ना, डर जो होता है कि now it's the end of the world.
My life went upside down.
Stigma associated with it, which is very scary.
In our country, more than 14 lakh people get diagnosed with cancer every year. Out of that, more than 9 lakhs die every year because of cancer.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
We made history for a reason tonight.
Will it change the shape of American foreign policy? Violence has erupted in Manipur once again. How can we pass judgment, sir, before any inquiry that, they were volunteers or militants, sir?
Welcome back. You're watching Morning Brief at 9. A quick look at all the global stories in news this morning. Let's begin with the US. President Donald Trump has initiated a bold tariff strategy aimed at Canada, Mexico and China, America's three largest trading partners. Now, on 1st Feb 2025, Donald Trump imposed a 25% tariff on Canada and Mexican imports, along with a hike of 10% tariff on goods from China. Now, this aggressive move is part of Trump's broader America First trade policy, which he believes will protect US industries and curb illegal immigration as well as drug trafficking. Now, Trump has characterized these tariffs as necessary to address what he sees as decades of exploitation by these countries. He argues that this strategy will help rebalance trade relations and secure America's economic interests. Take a look.
U.S. President Donald Trump on Saturday ordered hefty new tariffs of 25% on goods from Mexico and Canada and 10% on imports from China, White House officials said. The tariffs are set to go into effect Tuesday. The move made by Trump at his Mar-a-Lago estate in Florida threatens to ignite a trade war that could disrupt more than $2.1 trillion of annual trade. Trump is using the International Emergency Economic Powers Act to back the tariffs, which allow sweeping powers to address crises. There is a carve-out for Canadian energy products, which will face a 10% tariff rate. Trump set the February 1st deadline to press for strong action to halt the flow of the opiate fentanyl and precursor chemicals into the U.S. from China via Mexico and Canada, as well as to stop illegal immigrants crossing U.S. borders. A model gauging the economic impact of Trump's tariff plan from EY chief economist Greg Dacko suggests it would reduce U.S. growth by 1.5 percentage points this year and throw Canada and Mexico into recession. Dacko said the tariffs could usher in stagflation in the U.S. and trigger financial market volatility. Trump acknowledged that higher costs could be passed on to consumers and that his actions may cause short-term disruptions, but said he was not concerned about their impact on financial markets. The tariffs are expected to hit everything from avocados to electronics. Automakers would be particularly hard hit through tariffs on vehicles assembled in Canada and Mexico. Their vast regional supply chain, where components can cross borders several times before final assembly, would further exacerbate these costs. Canada has drawn up detailed targets for immediate retaliation, including duties on Florida orange juice, a source familiar with the plan said. While Mexican President Claudia Sheinbaum has also threatened retaliation. She said she would wait with a cool head for Trump's decision and was prepared to continue a border dialogue with him. China has been more circumspect, but vowed to defend its trade interests.
All right, let's put that more into perspective and really take a look at where things stand at this moment. Like you heard, in response to Trump's tariff, Canadian Prime Minister Justin Trudeau quickly announced retaliatory measures. Canada plans to impose a 25% tariff on over $100 billion worth of U.S. goods traded with China, including everyday items like honey, tomatoes, clothing, as well as, like he mentioned, the Florida orange juice. Trudeau expressed his disappointment during a televised address, emphasizing the strong ties between the two nations and stated, "We don't ask for this. We didn't ask for this." Now, as markets react to the announcement of these tariffs, investors are bracing for potential economic fallout. Analysts warn that the tariffs could lead to increased prices, inflation for consumers, and disrupt supply chains across various industries. The anticipated impact on inflation is concerning. Experts suggest that rising costs could affect grocery prices and other essential goods. The stock market is already showing signs of volatility as traders assess the potential long-term consequences of this trade conflict. So what exactly seems to be Trump's strategy behind these sweeping tariffs? Well, to begin with, in his recent social media post, Trump emphasized that while there may be pain in the short term, the long-term benefits will be worth the pain. His views, and he also views that these tariffs are a tool to protect domestic industries and increase government revenue while pushing foreign companies to invest in U.S. production facilities. Now, Trump's administration aims to leverage the financial strength of the U.S. to influence global trade in the favor of the United States. He's also linked these tariffs to broader issues such as illegal immigration and drug trafficking, particularly focusing on fentanyl smuggling from Mexico and China. Now, despite acknowledging potential economic discomfort, Trump remains firm in his belief that these measures will ultimately lead America into what he called in his inauguration as the Golden Age. Take a look.
Canada will be responding to the U.S. trade action with 25% tariffs.
Canada and Mexico announced plans on Saturday to tax U.S. goods in retaliation to sweeping new 25% tariffs ordered by U.S. President Donald Trump on imports from their countries. It's a move economists say could lead to a trade war that risks reigniting inflation, with Trump also ordering a 10% tax on products from China. At a news conference, Canadian Prime Minister Justin Trudeau said his country's tariffs on the U.S. would be similarly far-reaching, including everyday goods and consumer products. He warned Americans about what he called real consequences for them as well.
Tariffs against Canada will put your jobs at risk, potentially shutting down American auto assembly plants and other manufacturing facilities. They will raise costs for you including food at the grocery store, gas at the pump.
Mexico's President Claudia Sheinbaum said she's ordered her economy minister to bring in tariff and non-tariff measures to defend her country's interests without giving details. In a post on X, Sheinbaum stressed her government does not want confrontation, but collaboration and dialogue. The United States is by far Mexico's most important foreign market, while Mexico overtook China in 2023 as the top destination for U.S. exports. In contrast to Canada and Mexico's direct retaliations, China gave a toned-down response on Sunday. The Chinese government denounced Trump's trade action, but left the door open for talks with Washington that could avoid a deepening conflict. China's Finance and Commerce ministries said Beijing will challenge the tariffs at the World Trade Organization, which is a symbolic gesture that poses no immediate cost or threat to Washington. They also said China will take unspecified countermeasures to the levies. Trump's tariffs will take effect on Tuesday to address what he called a national emergency of fentanyl and illegal immigration pouring into the U.S. In China's sharpest pushback on Sunday, its foreign ministry said the country has carried out extensive anti-narcotics cooperation with Washington, saying, quote, "Fentanyl is America's problem."
Staying with the U.S. Commerce Department reported that the Personal Consumption Expenditure or PCE price index rose by 2.6% year-on-year in December. Remember, the annual inflation rate through December rose 2.6%, the biggest gain in 7 months. Take a look at what this means for interest rates going forward in the U.S.
U.S. inflation increased by the most in 8 months in December, suggesting the Federal Reserve will likely be in no hurry to resume cutting interest rates. The Commerce Department's Personal Consumption Expenditures Price Index, the Fed's preferred inflation gauge, rose 0.3% last month. That was in line with economists' expectations. The annual inflation rate through December rose 2.6%, the biggest gain in 7 months. Core PCE, which strips out volatile food and energy prices, rose 2.8% annually. The Fed kept rates unchanged on Wednesday for the first time since launching its policy easing cycle in September. The policy statement accompanying the decision dropped prior language that said inflation had made progress toward the Fed's 2% target, instead saying that it, quote, remains elevated. The central bank has forecast only 2 rate cuts this year, down from the 4 it had projected in September. That reflected uncertainty about the economic impact of President Donald Trump's plans for tax cuts, broad tariffs on imports, and an immigration crackdown, which economists view as inflationary.
And before we end, let's take a look at the latest on the Panama Canal controversy. Panama's president, Jose Raul Mulino, has firmly stated that the sovereignty of the Panama Canal is non-negotiable following talks with U.S. Secretary of State Marco Rubio. While dismissing any debate over the canal's control, Mulino highlighted the possibility of repatriating more migrants as part of ongoing discussions with the United States. We leave you with that story.
Panama's President Jose Raul Mulino stressed that sovereignty over his nation's namesake canal is not up for debate after a meeting with U.S. Secretary of State Marco Rubio on Sunday.
The sovereignty of Panama is not up for debate. That is very important. There is no doubt that the canal is operated by our country, and it will continue to be so. I do not think there has been a discrepancy in that.
Panamanians took to the streets to protest Rubio's visit, displaying posters of him dressed as a Nazi and others of Trump, labeling him a fascist. Union leader Saul Mendez expressed his displeasure with Trump. He wants to annex Canada. He wants to invade Mexico. He wants to take the canal. He wants to rip Greenland away from Denmark. Trump is looking for World War III, he says. Trump has repeatedly insisted the U.S. must retake the canal due to his claims of undue Chinese influence, which Rubio reiterated during the meeting, according to the State Department. The Panamanian government has vehemently denied ceding operation of the canal to China and insists it administers the canal fairly to all shipping. Though the canal itself is operated by Panama, the two ports on either side are run by publicly listed Hong Kong company CK Hutchinson. Other ports nearby are operated by private companies from the United States, Singapore, and Taiwan. The two sides did see more eye-to-eye on migration, with Molino suggesting a possible expansion of an existing agreement with the U.S. that could pave the way for more direct deportations of non-Panamanian migrants who cross the Darien Gap on Panama's southern border with Colombia. Over the past few years, the area has seen a surge of people bound for the U.S. He insisted, however, that the U.S. government would need to cover the cost. Rubio's trip to Panama marks a first stop on a tour of several Central American nations, as well as the Dominican Republic, over the next few days.
India spends $75 billion on foreign cargo vessels.
$75 billion per annum. That's a lot of money.
Imagine a situation where 95% of our cargo is coming on ships which are not owned by us. If we are still not prepared, if someone were to say that we are not going to give you ships, then we'll be stuck. So the entire nation's economy is at risk.
We are very clear that shipping is also strategic.